Three, two, one. Roll the footage. Hello, everybody, and welcome to the Strategy Show. I'm your host, Simon Severino, and today we have President at Portus Wealth Advisor, just launching Charlotte Growth Partners that will have a series of investment vehicles for investing in the Charlotte area, North Carolina. Welcome, everybody, William Bissett.
Thank you, Simon. I appreciate it.
So cool to have you
So,
here.
no,
Yeah,
it's definitely cool to be talking to you across the pond.
absolutely. We will deep dive into your three CEO tips that are figure out how to separate the noise, find profits, and don't be a jerk. I'm super excited. But before we go there, what are you currently creating?
Yeah, no, I mean, you mentioned it in the intro. So one of the things I'm working on and have been working on for the last 6 or 8 months, I guess, is um, figuring out a way. Charlotte's a growing market in North America, right? It has been for the course of the last 10 years, and it's if I'm a betting person, and I probably shouldn't be a betting person in wealth management, but every investment we make is a thesis, right? It's a thesis of diversification or thesis of something that wins or succeeds, et cetera. Um, my thesis for a while has been that Charlotte will do quite well over the course of the next decade. It's in a southern climate. It has a low tax rate. It has a low cost of living. It has a phenomenal airport. It has a decent football team and an okay basketball team. So people continue to move to Charlotte. Corporations continue to move to Charlotte, and the Charlotte market continues to grow. But for a lot of people that sit here in Charlotte, to participate in the actual growth of Charlotte from an investment perspective is very difficult. And so what we want to, or what I'm in the process of creating with Charlotte Growth Partners, is a series of investments that sits underneath a large umbrella that will allow people to participate in the growth of Charlotte. So whether or not it's a real estate portfolio, which is the first portfolio that we're going to launch, that will allow us to be limited partners in a diversified portfolio of real estate projects in the Charlotte market. Probably a small equity play into local companies, a lending fund that's lending out to small businesses across the Charlotte market, et cetera, et cetera. So what we're trying to do is create a way for people here in Charlotte to win with Charlotte in a diversified portfolio that kind of sits outside of their diversified portfolio of stocks, bonds, mutual funds, et cetera, et cetera. So um, it comes with all sorts of legal challenges and complications and everything else. But it's a fun project to work on for sure.
Before we go into your first CEO tip, figure out how to separate the noise, we pass through the segment of our show that is called the Strategy Award. If you could only pick one person or venture that is doing things very differently, but from your perspective, they are doing the right thing, who would that be?
Yeah, it's I'm going to default to I run my own podcast, as you might know. I'm going to default to my most recent podcast, which I do on a regular basis. A team that founded Core 10. Her name is Lee Faribault. She has essentially developed a what they have called hearshoring, which allows them to locate in small communities in Tennessee, West Virginia, and other communities across the U.S. They locate a essentially a fintech development team in these small cities with universities there, where they can pay developers competitive salaries in that community. They also happen to be competitive with salary costs that they'd have to pay if they were to hire a team out in India or someplace else. So essentially what they're doing is they're developing a company that allows development to happen within the borders of the U.S. And promote it within small town communities rather than every developer having to move to San Francisco or Austin or New York or Boston. It allows these folks that are really good at technology to stay in their own small town that they're accustomed to, make a good living, and be on the front edge of technology. So I think what Lee and her team at Core 10 are doing is a really neat concept. I think it's promoting economic growth here in the U.S. and the middle class. And as has been well documented over the course of the last several decades, the middle class in the U.S. has eroded. So I think concepts like that bring the middle class back in the U.S. are what you might call doing things the right way.
Absolutely, especially right now where your local society seems to be more and more separated. But we
That's an understatement. It's an understatement. We're quite separated.
from the outside, you have always to be polite. You can put it more bluntly. I can't.
Fair enough.
So, talking of separation, your CEO tip number 1 is figure out how to separate the noise. Can you unpack that?
Yeah, I mean, any line of work or any business that we're in, or just the society at large today, with the internet on your phone and the 24-hour news cycle, there's just so much. There's so much information that comes to you, and it's the squirrel syndrome, right? Where if you're a dog, you see a squirrel, you chase it, and you see the next squirrel and you chase it, and you see the next squirrel and you chase it. And as a business owner, and I mean, gosh, no, you don't have to be a business owner to get lost in that syndrome of squirrel chase, with the noise. And if you just let the noise constantly guide what you're doing, you're never going to be successful as a CEO, or I don't want to say in life in general, but so you've got to figure out what's important to your business, what's important to your life, and focus in on that. Now, that doesn't mean that you can't, go off and play on Instagram or Facebook or whatever way might waste an hour or two out of your day if that's the way you choose to do it. But all the noise that sits inside of that, go back to the core, go back to who you are as a business, go back to who you are as a person. And if it's not impacting it, just ignore it. And gosh knows, you talk about separation in the society. If people could just ignore the noise and focus on what's important to them, I think Facebook would be Facebook, Instagram, any of those, Twitter, any of those other sites would probably have a heck of a lot less arguments back and forth in it. And if you're trying to drive a business that way, you're going to drive a much more successful business, because it's not a squirrel every time. It's what's driving your own people forward, what's serving your customers, and how are you growing the bottom line over the course of the next 3, 6, 12, and 60 months. So separate the noise and focus on what's important, right? I mean, how many times do you hear that in 1,000 different business books? But it goes back to me being one of the most key aspects of things.
Absolutely. Yesterday we had Nir Eyal on the show. He wrote a wonderful book, because there are many, but not all are equally helpful. This is a very good one, Nir Eyal, Indistractable. I can absolutely recommend it.
Absolutely.
He's really well scientifically researched also, and applicable. Absolutely. Yeah, thank you so much. And your second CEO tip is around finding profits. This is especially important in Funky 2020. So can you tell us more about that?
Yeah, I mean, and I'm involved in the startup space here in Charlotte too, right? I had a startup of my own from 2012 to 2015. I've been a member of a local angel fund since 2015. And so a lot of startup founders, and I think it's shifted gears a little bit. A lot of startup founders are always just chasing users, right? I need users. I need, I just need to get bigger. I need this. I need that. And all of that's helpful. And they say, well, if I just get users, I can go raise money. Well, if you raise money, you dilute yourself out. So I'm not saying that raising money is a bad thing. I mean, raising money can help, pour fuel on the fire, and there's a boatload of different reasons to raise money. But there are also ways to create profitability in the process of creating users. And profitability is a fantastic thing because it's non-dilutive funding, right? So outside capital, whether or not it's investment capital, whether or not it's lending capital, whether or not whatever shape or form it sits in, it's not bad. But self-generated profits that you're redeploying inside the business, that's fantastic too. So go find that profit center within your business. And then, I mean, again, go back to point number one, go find that profit center, focus on it, and let that drive the success of the business as it goes forward. So, again, in the startup space, you hear far too few people talk about profits. Profits are always one of those things that we're going to get to in a year or 2 years or 10 years or whatever it is. But don't let that distract you from the ability to find it today too. So not as applicable for a 10-year small business owner in a small town or something like that, but certainly applicable in a lot of different instances for sure.
Absolutely. This is so important. We do one-on-one coaching with CEOs, and we are surprised to see that even Series A, Series B companies, when our sprint coaches always asks, what are the numbers of next week? And then we hear a little bit about assumptions about users. We hear about assumptions about possible revenue, but we never hear the profit. And even if we watch back and say, okay, show me the profit, they show us gross margin, but never net profit. So yes, I am really happy about your CEO tip number 2. And also there is a very nice book. It's called Profit First by Mike Mikhailowicz, which is really helpful to help you get the cash flow management upside down because most people do the accounting cash flow management, which is something completely different. In order to manage, you need to know the profits first, and then the revenues, and then the costs. So you know when to hire, how to scale, in what to invest.
Yeah.
And most systems don't give you that information, and especially they don't give it to you every 7 days as you need it to take decisions. They wait 3 months, and then they have to extrapolate it in a very difficult way. You're a wealth advisor. Do you also see these things?
Oh yeah, I mean, absolutely. We live by Wall Street, right? I mean, Wall Street reports on a quarterly basis, so every company thinks, well, I should just think about things on a quarterly basis. And no, I mean, you're exactly right. I mean, especially over the course of, we've seen it over the course of the last 6 months, where you've got to go micro from time to time, right? And especially if you're a growing business, knowing where things are on a regular basis is extraordinarily important to the success of the business. So yeah, we deal with small business owners. A lot of small business owners are stuck in that Wall Street mentality of what's profit doing for the next quarter. But it's payroll comes out twice a week in a lot of instances, right? So where's the profit coming from for the next 2 weeks to pay out payroll? So yeah, absolutely agree with you 1,000% on that.
And which books did inspire you on a professional level?
It's funny. So 2 books stuck out on this question right here. One is by a former Democratic presidential candidate, Andrew Yang. He wrote a book. He started a program called Venture for America, which the concept was smart people should build things. So that's the name of his book, is Smart People Should Build Things by Andrew Yang. And what it talks about is, far too many people from, our top universities go in and do consulting work. And they go in and they look at companies and they figure out how different companies should optimize this or optimize that to grow going forward. Where the reality is these smart people, their ability to create something using their brains and actually grow the economy is phenomenal. And we've stopped that. I mean, entrepreneurship in the U.S. and I would imagine around the world, I haven't looked at global statistics, but entrepreneurship around the world or in the U.S. has fallen dramatically. And so Andrew's point was smart people should build things. So how to profound impact on me. It kind of helped spur me to creating Porter's Wealth Advisors, Charlotte Growth Partners, podcast, the other things that I'm in the process of doing. Go out and do it, right? Don't sit there and watch somebody else do it. Do it yourself. And the other one, kind of long time author I followed is Patrick Lencioni, his book on getting naked. The very simple book of different types of consultants going in, consultants with big fancy charts and graphs and watches and all kinds of other things versus the person that just walks in the door with a notepad and starts to get work done. And I've always been a walk in the door with a notepad and kind of get work done. But it really focused me more and more on that as I work with clients and business owners, et cetera, is just go in and put your hands in there and start getting dirty, right? Rather than fancy charts. So both of those books, and as you know, a host of others have had a profound impact on me, but those two kind of always stick out in my head. Smart people build things and getting naked.
Beautiful. Let's go to your third CEO tip, which you say is the one that never changes. Don't be a jerk.
Life's too short, man. I mean, how many hours, days, months, years do we have on this planet, right? And so don't be a jerk. I'm a president of my homeowners association too. It's the way I end every one of my homeowners association meetings as we're there with our neighbors, right? I mean, it's your next door neighbor. Be nice to your next door neighbor. If they don't want something, a pink, flamingo in your front yard because it's ugly, then take the pink flamingo down. And the same thing goes in business, right? I mean, be nice to your employees. Don't be a jerk. Your employees serve your customers. They drive the profit. Don't be a jerk to customers. Just go through life trying to figure out ways to help other people. It kind of gets back to that getting naked perspective, right? From Patrick Lencioni. Just walk in, get your hands dirty and do things the right way. And if somebody else is being a jerk, it doesn't mean that you have to fire back in that same direction. Either walk away from it or change the conversation. We don't need the elevator stress. We don't need more people yelling at each other on Facebook or Twitter or anything else. Change the conversation. Find a place that you agree. Make the world a better place rather than a worse place. And all the yelling, in my view, only makes it a worse place. It's not solving a problem. It's not going back to that very first tip that we talked about, which is squirrel, right? We get into so many arguments because it's a squirrel. Somebody said something and I don't agree with it. I've got to chase that down. It's not important. Go back and focus on the right thing. The right thing is do the right thing. Be a good citizen, be a good neighbor, be a good corporate business owner, be a good philanthropist in your city. We're all here for a limited time, and you making somebody else's life difficult by being a jerk is, it's just not worthwhile.
I love it. Can you tell us a little bit more about your podcast? Why did you start it? Is it because you want to help smart people build things around you?
Yeah, that's really good. So I said earlier, I joined the Charlotte Angel Fund in 2015. And so here in Charlotte, the Charlotte metro area is about 2 million people. And I joined the Charlotte Angel Fund. I started going to the Charlotte Angel Fund meetings because I'd had some success with my startup, but not a lot. And so when I shut it down, I joined the Charlotte Angel Fund, and I wanted to help startups learn from the mistakes that I made and also learn from the successes that we'd created along the way. And so I was going to these meetings, the Charlotte Angel Fund meetings, and 3 companies pitch every month, and to talk about their business model. The audience is there, and at that point in time, we were getting 25 to 30 folks in the audience. And at the first month I went to it, I was like, man, this is really cool. 3 companies come pitch and we get to learn, what their vision is for the future. And wow, they all got this beautiful hockey stick curve for their revenue. And that's fantastic. And there's these 25 or 30 people that are really excited about entrepreneurship in and around the Charlotte region. And then I went the second month, and it was the same 25 or 30 people. And I was like, oh, this is still really cool. Hockey stick conversation. And then the third month, and there's the same 25 or 30 people. And I was like, well, this sucks. there's 2 million people in the Charlotte marketplace. Why are only 30 people interested in early stage companies and entrepreneurship in the Charlotte region? And so the average, commute in Charlotte is about 30 minutes. And so when I first started the podcast years ago, the concept was, look, let's interview folks that are building. So let's interview the entrepreneurs in the Charlotte market. What are they doing? How are they doing it? What are the struggles they face? Why is it different here than what they hear about in San Francisco or Austin? So interview the entrepreneurs, interview the investors. So those folks that are investing capital in startups here in the Charlotte area, as well as across the country. And then 3, let's interview those folks that are trying to help build out the entrepreneurial network. And if we can interview those 3 folks, and if we can rotate through that on a fairly consistent basis, then we can educate our Charlotte-based listeners on what entrepreneurship in the Charlotte region is. And if we can educate them on what it is, a lot of people in Charlotte are in the banking community or the legal community or in hospitals or sports management or whatever it ends up being, right? So there's not as many native natural entrepreneurs here in the Charlotte market, which means those folks don't know what it takes to build a business. So let's sit down and do podcast after podcast after podcast talking about what it takes to build a business, how you spot potentially a successful business as an investor, what you look for, the types of questions you ask, how do you build out an entrepreneurial ecosystem, so that our listeners understand what's happening from the ground floor in Charlotte, so that we build that from 25 or 30 people to 40 to 50 to 50 to 60 to what now the Charlotte Angel Fund now, and it's not by any way, shape, or forms due to me. We've got, I think, 95 members of Charlotte Angel Fund 2. And the entrepreneur base here in Charlotte is much broader. Folks that talk about it on the street are much wider. People start to recognize local entrepreneur celebrities a little bit more. And that's only helping entrepreneurship in Charlotte bubble up. And over time, the goal is that diversifies out our economy here in Charlotte. So we're not so reliant on Bank of America, Wells Fargo, and Duke Energy, and all these big global S&P 100 type companies. So anyways, we started the podcast to educate people about what entrepreneurship was, and how they could potentially invest or participate or support it. And it's been a boatload of fun. And I'd like to think it's had some impact on the entrepreneurship and the investment capital that now flows through Charlotte 3.5 years later.
Love the idea. Beautiful. And it definitely is a contribution to help smart people build things.
It is. So,
Yeah.
and I think technically speaking, whether or not it was natural or not, I did it after me. I mean, again, I did it after meeting Andrew Yang. So I'm on the board of the local Charlotte Venture for America program. So again, Venture for America is in 12 different cities across the U.S. And Andrew at that point in time wasn't running for president. I guess he's not running for president anymore either. But he was running Venture for America, and he came to town to meet with the board, to meet with those folks that had graduated colleges and working with small startups across the country. And so he was in Charlotte, gave me a signed copy of his book. And it was soon thereafter that we launched the podcast. So yes, very much nurtures the smart people build things type concept.
Beautiful. What did you recently change your mind about?
So many things, right? I mean, I think we have to be receptive to changing our minds about things. Very recently, I'll go into my personal life and change my mind about being so, I don't want to say strict with my kids, but point to point to point, right? You must do this, you must do that. To being much more of a nurturing parent, and trying to understand where they sit. So kids today have so much data and information and feedback and everything else coming towards them. My kids are 10 and 7. So they know a lot of the things that are going on or what's been done wrong, or something else that they should improve. And they're already starting to beat themselves up, and about those different things. And so rather than as a parent pile on to them beating themselves up, I've really just shifted gears recently and said, you know what, I've got to be more supportive. I've got to understand where they sit, how they're receiving this data, how they're thinking through things, and help them change their mindset so that it's not a negative and that it becomes a positive. So, you know, step away from business for a second and just realize that, yeah, I always tell my clients, my wealth management clients, those ones that have children, their most important asset, and they all nod their head when I say it, their most important asset is their kids. And so if I'm talking to clients about that, then I need to be putting that in play in my own life. And how can I better my kids over the course of the next, 8-10 years, before they go off into the wild in college or the workforce or whatever it might be. So I've become a more, I don't want to say caring, because I'd like to think I was always a caring parent, but maybe a little bit more of an understanding parent.
I resonate a lot with that because I have two boys. But today in our coach meeting, so all coaches come together once a week and we discuss the progress of every client in a numeric way. But today we discussed what is our philosophy as a coach, what is really important. And we went back to our basic article of John Whitmore, Coaching for Performance. And what he says there, it's an amazing book, people. It's an amazing book, and it is where this grow model comes from. Oh, the light is exploding. It's where the growth, one of my lights is exploding. It's where the growth model comes from. And he says he was training military performance in an academy, and he said he changed the way he coaches to listening, and that made the performance much better. And it was specific moments that he's showing in this book when he says, okay, you have to run more tomorrow, and they're like, no, we are sore. And he changes his perspective, not pushing harder, but saying, hey guys, you are right, I made a mistake, and I'm going to listen. And they say this changed everything for us, and their performance also became better. So when he changed from pushing to listening, everything changed. So I resonate on many levels with what you are saying. Beautiful. William,
Yeah, no, you're exactly.
Yeah.
I was gonna say you're exactly right. So it applies in personal as well as business and coaching and everything else, right? So yeah, being more receptive is not a bad thing, and it goes back to what we talked about earlier. Don't be a jerk, just listen.
Yes. And at the end, in this grow model, he says there are two things that you can really help improve. One is awareness, and the other is ownership. So awareness is when your kids say, okay, observe and recognize that they have all this data and what they are doing to themselves, that they are judging themselves and they're making pressure on themselves. And ownership is, okay, this is what I'm going to do. This is what I'm moving forward now based on that. These are the two main variables when you coach somebody, and it's similar to being a parent. These are really the two variables you're working on, and then you have different interventions. One is listening, the other one is teaching, the other one is consequences, etc. We have a big array of interventions, and all of them have their place. But at the end, the two things that you can really influence and that make the difference are their level of awareness and their level of ownership. You cannot
No, it makes sense.
teach them to read. You can just be a role model and read every day, and then maybe they pick it up. He said, I can tell them to run, so I can make them run, but I cannot make them run fast.
You could put a tiger behind them, but that only work for so long, right?
Exactly. Exactly. So cool.
That's funny.
Who
So
should be
good
my
points.
next guest?
I'm gonna stick with the theme of who's doing things the right way. And I think, there's an entrepreneur here in town. Her name's Michelle Bulow. She owns a company called Bellatuno. They make or they source out. They make and source baby products, right? So bibs and all kinds of things that babies need as they continue to age and grow up. And in that model, one of the things they do is you buy a product, they give a meal to a child in the U.S. And I think that model and those folks that are building out that type of model, because what she's trying to do through that model is feed poor children. And when you feed poor children, you stop all kinds of negative consequences in society. So those entrepreneurs that are trying to figure out how I can be, successful and profitable and everything else, but with a stated mission of giving back to something to help society at the same time, those folks are, they're focused. They're not being a jerk. They're focused on profits because they know that if they're not profitable, their give back model is not going to work anymore, right? They're no longer going to be in business. So they're focused on their goal. They're focused on profits, and they're certainly focused on not being a jerk. And I've known Michelle. She was on the podcast about 1.5 years, 2 years ago. I've known her since that time period. Great entrepreneur, has been recognized by EY on many occasions, on many different levels. And again, as somebody that's just doing things the right way, and she understands business 1,000 times better than I do. So should be a much more interesting podcast guest than I was.
I was so delighted to have you here. Thank you, William Bissett, for sharing your journey, your wisdom with all of us. And please come back soon.
Yeah, thanks so much for having me.